FATCA originally was a US initiative which was designed to encourage US citizens to report on their assets and income they held overseas for tax purposes. The way it's going to work was that the US was going to require foreign institutions, financial institutions, to report on US citizens who own assets and had income sitting with those institutions. Now, the way that in practice that's actually going to work is that a whole host of governments, including the UK, for example, and the Channel Islands governments, have agreed with the US that they're actually going to introduce local law that makes it a requirement under local law for all these finance businesses to do that reporting on their US citizens.
So how exactly is it going to affect organisations and companies in the local Channel Islands market?
Well, the Channel Islands businesses that are going to have to now sit down and look at all their client base and all the entities in which they manage, and identify where there are US persons who have got a connection with that asset or structure, and then every year they're going to have to report initially to their own local tax office, who will then report to the IRS on those income and assets related to US persons. Now, what's become particularly interesting and why this has really become even more important for local businesses in the Channel Islands is at the same time as that US agreement, the UK has asked the Channel Islands and the overseas territories, so the Cayman, Bermuda, countries like that, to enter into the same sorts of agreements with the UK as we're doing with the US. And that's a much bigger challenge than the US FATCA was, because whilst the US FATCA, it was a bit of a pain in the neck to have to go through the process. Not many businesses have got a significant amount of US related work, whereas obviously virtually every business on the island has got a significant amount of UK related customers and clients. So they're going to have a much bigger job to actually sit down and analyse their client base over a quite short space of time to also comply with that local law.
And if some people are still confused about how the changes may exactly affect them, what would your advice be?
Well, because the agreement with the UK has now been signed and that will come into force, and we expect the US one to come into force quite soon, they've really got to make sure that now they understand exactly what the agreement means, understand exactly what their requirements as a finance business are, and actually start to put in place an action plan. And they're really to start working on identifying those US person, identifying how they're going to do the reporting, because that reporting starts next year. Now, perhaps more significantly, again in relation to the UK one, at the same time as Channel Islands business, Channel Islands government agreeing with the UK to have this FATCA style arrangement, we've also agreed to put in place a disclosure facility which is aimed at enabling UK citizens, UK residents who've got undisclosed bank accounts or undisclosed structures in Channel Islands to come forward and regularise the UK tax affairs in a slightly less confrontational way than they would normally do. Now, we don't actually expect there to be a significant amount of business or significant amount of disclosure to be made under that disclosure facility, but nonetheless, it actually requires all financial service businesses on the islands, and it's all financial service businesses, that they have to identify all their UK resident clients and write to them and notify them about that disclosure facility by the end of 2013. So that's really quite immediate, they need to do that.